Good day, everybody. It is Wednesday, October 21st, and your cherry bomb trade is in for today. It is going to be a long call vertical, so we're going to be getting some debit spread action going on. Google, unfortunately, though, is not particularly liquid, and we're going to be in the weeklies. So, see what happens on getting filled. It has a liquidity rank of 2 out of 4, but its IV rank is a 41, so that's pretty good. Which is honestly a little high for me if you think about the IV rank and the price of options. So I'm a little surprised we're choosing a debit spread on this one. But hey, sometimes we vary in our mechanics here on these cherry bombs, and I think it's good for us to see how well those variations work out for us. So maybe we need to keep a little bit of a notebook on the ones that, veer off the path as far as mechanics wise. How well do they work out for us? All right, so we're going to hop on into our platform of choice, which is of course ThinkOrSwim, and the simulated trading platform there. We're going to get started. So hi everybody, my name is Neil and this is Option Theory. I want to thank you so much for joining us today. If you're new here, head on down to that description and you're going to want to get these emails that we get. We get them from Tasty Trade 4 days a week. They have trade ideas in, and we look to build out that portfolio, and I'd say so far we've been pretty successful. And I think if you do this just doing cherry bombs for a while, you start to see what your abilities are and whether or not this is a profitable opportunity for you. I think you'll be pleasantly surprised. But the good news is if you use ThinkOrSwim and you use the simulated trading platform, you can get all this learning without risking any real money. But I do urge you to consider it that it was real, right? So with all that said, you can see here we have our portfolio here in our margin account. Yesterday we put on a viewer trade, a viewer suggested trade. It was supposed to be on Monday, but I didn't get to do it on Monday. And it worked out real well. So I already put on a closing order. Let's see if that happens to already be at 115% of the P&L. Yeah, okay. That's probably has to do with the width of the strikes on this one. I don't think I'm actually going to get filled. But then again, I didn't think I was going to get filled on the trade at all yesterday either. So hopefully you're following along with that. If you want to go check out yesterday's trade, they're all there. I have, I think, over 160 videos now. I'm pretty sure I'm getting close on that 170 mark now. All right. With that, let's go ahead and get this trade built out, shall we? We're going to be looking at the wrong underline here. We're going to type in Google, and we're going to go to add simulated trade. We're in Google, and we're going to be in the November 27th weeklies, which as of today has 37 days to expiration. And we're going to be doing a call vertical. And so the mechanics on that one are pretty easy. You head right to the at the money strikes, right? And then you go ahead and you're going to buy something that's in the money. And what's interesting on this one is that you're going to maybe decide for yourself what width you'd like. So I believe the cherry bomb email has us buying the 1550. I'm going to click on that ask here for the 1550, and then selling the 1560. I'm going to hold down the control key and click on the bid for that one. And so let's see if I got those numbers right. So we're looking at a $500 debit on that one, right? Which means on a $10 wide, we're risking one to make one on this case, right? So that is an option. And if that's a little too wide for you, I suppose we could change that, right? At which point you'd buy the 15, hang on a second, the 1555. Change that. Right? And so now we're looking at a debit of around 230. To be honest, that's about as much as we ever really risk in the trades that we've been doing with our defined risk trades. So I'm a little bit more comfortable with that. But let's take a look at the cherry bomb trade and analyze this one here. I mean, we know our max risk of this one. But you can see that these bid-ask spreads are pretty wide. Pretty wide. All right, everybody, let's head on to this risk profile and see how we're doing here. Let's first set, of course, our calendar, proper expiration, the 28th. And now we can spread this out a little more, get more of that expected move on the screen, and let's set our slices to break even. And so we're looking at according to this one, a 48% probability of profit on this particular trade. I believe the cherry bomb email had us at a higher one and a P50 that was in the 60%. So, you know, this may be more or less attractive to you. And this is where we can go ahead and dial in changes here. So if we make this instead a $5 wide rather than a $10 wide, let's buy the 15.5. You can see here that that's going to adjust our probabilities a little bit. And now we're at 48, right? So, little bit less, right? And, you know, this is, like I said, this isn't a trade I'm particularly in love with. And right here, so 48, that's close enough. All right, so if you can be bullish, let's take a look at the charts to see if you get an opinion looking at this chart. You could be bullish on Google. Let's go ahead and take a look here. Coming off a high right there, 1726. And we can see here, once it hit this upper band, it came back down to reality a little bit. Hit the lower band and it begins to come back. It hit the upper band and it seems to be coming back down again. So I don't know that I'm particularly bullish on this one. So this isn't a trade I'm in love with. I find what I think I'm going to want to do on this one is do the $5 wide and see what happens on that one. That way I'm taking a less risk on this one, because you know, I'm not particularly bullish on this one. But this is sort of that great point of practicing your mechanics and doing this sort of a thing and being like, hey, look, let's test it out. Let's test our theory. Let's see what happens. So I'm going to change my long call to a 1555. Of course, if you're going to put this trade on in your simulated trading platform, you can go ahead and choose whatever strikes that you like. But I'm happy with this particular one. I'm going to right click this trade. I'm going to choose confirm and send. And I'm going to see that my max profit is 270 and my max loss is 230. That's why I seem to have a little bit less than a 50% probability of profit on that one, is because I'm able to make more than I am potentially going to lose. So when you get that case, your probability is going to be a little off. But I feel like this trade is sort of a little bit of a, you know, coin toss. I'm going to hit send. That's going to put that over in my working orders. And should that fill, I will definitely set a good till cancel order on that one to take it off. If I get, you know, probably 30% or more, I'd be happy with that one. All right, everybody. I think that's it for today. If you've made it this far into the video, I want to give you a thumbs up. Thank you so much. I do appreciate your views, every one of them. And if you have an idea for an underlying you'd like to see traded like we do on Mondays or whatever, right? I'm still dying to hear from you in the comments, right? Or head on over to optiontheory.com/contact and you can send me an email. I promise, no spam. No one has been spammed by me. That's not going to happen. All right, everybody. Thank you so much. And until I see you in tomorrow's Cherry Bomb trade, happy trading.